So yeah, beautiful people, it's your mentor, Tumelo JPY here, and welcome to Market Breakdown Mondays with me, where we are going to be analyzing the market, evaluating, and also finding opportunities together. And also, one thing I like about the sessions is that I help you also to do what? Improve your style of trading by simply analyzing with you, right? Make sure that you hit that like button, you subscribe, and hit the notification bell so that when I drop, you always get notified. Let's get this account to 10,000 subscribers. So share this video with your friends, cousins, and your trading mates. Okay, before we go anywhere further, exciting news for you guys. Kindly note that I'm currently hosting a special for 1,000 Rand for the red print package. And the red print package consists of the following things, right? Your supply and demand full cost, your risk management plan, your trading chart layout. You also have the psychological part and also the how to build yourself your own red print for only as little as $60. But the only sad thing about this thing is that it will be ending by today, right? So which means whether you're watching this video today or tomorrow, this thing will be ending today. But if you're interested and you see that the time won't be on your side, the last day will probably be tomorrow morning. So if you want to be part of this movement, make sure that you text me. The link is there below. And then yeah, one other thing that is very important. On the description section, please make sure that you join the free group as I'll be sharing the analysis from this market breakdown on the free group. And then the other thing is that also create your XNet trading account so that you can experience a gold smooth trading platform. Without wasting any of your time, let's get into today's video and analyze the markets. Okay, so we are gonna be starting firstly with what? We're gonna be starting with German 30, right? German 30, we've had analysis like this, which is a successful analysis. We're anticipating that since our German 30 was on a bullish structure, we could see that we had an impulse correction and then an impulsive movement, correctional movement, a big impulsive movement, a huge retracement back to this support area that was once a resistant area. Price tapped into it beautifully so, and then we started seeing what? We started seeing an impulsive movement to the upside. So what I believe price is doing is just recovering from this major drop that happened. So as you guys can see, our main target would be at this area. So if you've been following me, you know that we have actually established a new way or a simplest way of approaching patterns, right? We said that each and every single time we are inside an impulsive movement, which is this phase of the market here, the range from your high to your low, this impulsive movement here, from this area to until price reaches that specific area there. Within this movement, we have internal impulsive and correctional movements. We have what? Internal impulsive plus correctional movement inside what? The overall impulsive movement. So what we want to do is to look for buying opportunities on what? On our impulsive movements, right? Yeah, so which means the end of the correction will be us looking for buying opportunities on what? Us looking for buying opportunities on the beginning of the impulsive movement, right? So as I've mentioned previously that, I'm helping you modify and work on your edge, right? Or your system. Some using trend lines, some using this, some using that. So there are a lot of ways to kill a cat. So I'm going to be showing you guys how you are supposed to look for those continuation entries to the upside on this overall impulsive movement and the internal structure of price, right? So what we are going to do now, since all this is a bigger time frame, we're gonna be scaling down to what? To a smaller time frame, maybe let's say 1 hour time frame, and then start looking on what is it that price was doing. So what comes at the back of our head was that we saw that price was what? Price was created this low, it pushed up, right? And then gave us a beautiful retracement back to this demand area, which is where we looked for our buying opportunities from. I even shared this on the Telegram, on the Discord, not Discord, man, on the YouTube channel, right? Back then when we were starting this series, right? We're looking for buying opportunities of this area. As you guys can see, there's really nothing complicated. It's just an impulse correction, impulsive movement, which means after the correctional movement, all we did was to look for a demand area that can act as what? Our point of interest, right? Our POI, right? Our POI, meaning that this is the area that we are most likely to see price reverse from. And then from there, we look for buying opportunities from it, and then price impulse to the upside. So this was supposed to be where we're supposed to have taken our first entry points. One thing I've also learned about this is that most of the time when you take a buying opportunity or selling opportunity on the impulsive movement from a correctional movement, right? Which means price is done correcting, and it's moving into an impulsive movement. The first entry, price has the lower chances of doing what? Actually retracing back to it, which means when you take this entry, make sure that you swing it. And then the rest of the remaining entries, the best thing you can do is to do what? Is to keep intradaying or catching scalps within those movements, right? So that's what we want to do. So which means this area here was the one that you're supposed to hold actually until you eliminate that main high there, right? That was what we're supposed to do. And then meaning that with the remaining movements, what is it that we're going to be doing? We can see that, okay, price impulses and then gives us a correctional movement, right? Gives us what? A correctional movement. So within this correctional movement, like I said, it's quite simple. Depending on how you want to approach the market, you can see that there's a rejection area, there's a rejection pattern of a double bottom, right? There's a double bottom rejection that you can use here. But for those that we're using demands, you can see that, okay, price missed our demand area here, right? But what's important here is this here, right? You can see that, okay, price is below what? Is below the equilibrium. So it's below the equilibrium phase of the market. So which means the ones that are using trend lines, this is the time where you are most likely to be favored, right? You are most likely to be what? To be favored on such situations, right? As you guys can see, price eliminates this low here, giving us a double bottom, which means that, okay, even guys, even listen, even if you were to draw your trend line like this, right? Even if you were to draw your trend line like this, you can see that, okay, there's also what a breakout at this area here, then price continue impulsing to the upside. If you want to modify it and then make it something like this, you can see that, okay, you're going to find yourself with a major key, for those of you guys that are aware of what major key is. So a breakout and then a retest on that line. From there, pricing passes to the upside. The target will be the second high after this one. So which means this is what you're going to be targeting for, right? Price continue impulsing to the upside. With price impulsing to the upside, like I said, what is it that you're seeing? We are trending in between this high and this low here, which means this is the internal phase of what? The impulsive movement inside the overall impulsive movement, right? This is the overall impulsive movement, and then we are trading the internal impulsive movement, which means inside this internal impulsive movement, there's also what? Impulse plus correction, right? There's also impulse and correction. The overall, guys, is an impulsive movement. So we are trading the impulsive movement, which is this one, and inside this impulsive movement, which is this area here that I'm talking about. So there's an impulse, there's a correction, there's an impulse. Inside this impulse, there's also impulse and correctional phase of the market. So what we want to do is to look for buying opportunities within those opportunities until we eliminate the high, right? Until we do what? Eliminate the high. So since, well, I use supply and demand, my ways of looking for my buying opportunity and the way I've taught my members to look for their buying opportunities, I'd always tell them that use the reactional phase of the market to look for your buying opportunities, right? If you don't know what reactional is, join the red print movement, right? So you're gonna be looking for buying opportunities on areas like this. See areas like this. These are our areas of interest. So you wanna look for buying opportunities on areas like this. So we don't go for any areas. We go for this area specifically, right? We go for this area specifically, which means if we buy at that area, you're gonna use the second trade take profit, which means our take profit will be here. Our take profit will also be here. So you are in a way intraday trading. Why? Because of every single time price eliminates this high here, the high above it, price has the higher chances of actually tapping into it and then retracing afterwards, right? So we're gonna look for buying opportunities within this phases of the market. So as you guys can see, take profit hit here, and then we have another take profit hit here, right? And then since well, all these take profits were hit, what you can do also, guys, like I said, you have to be smart, man, when it comes to approaching price. A high was eliminated, price continues with its overall structure. What is it that you can see? Price does what? It creates an impulse and then a correction and then an impulse. But within this impulsive movement, you can see that it creates some sort of a pattern like this, right? Which means once price eliminates that one, I believe that we approach price differently. Hence why my level of experience at some point, there are some patterns that I've actually established, patterns like this. I know that once a pattern like this is being created, price has to eliminate the low of where the pattern started, and then we are most likely to impulse to the upside, which means what you can do is to look for a trend line breakout in this area and then impulse with price. So most people would use this as a rejection pattern to the downside. I wouldn't do that because I know that the overall direction of the market is an impulsive movement. So price is creating this pattern to come eliminate a specific low, right? And then or tap into a specific support for those that are using support and then impulse to the upside afterwards, right? So which is something that I'm definitely gonna look for. As you guys can see, this is the support area here. This is the support area here, right? So which means you are more welcome to do what? If you want, you can scale down to a smaller time frame, go to your 7 minutes time frame. When you get to your 7 minutes time frame, what would be your interest? Like I said, at this point, guys, one thing that I know about major key, it works on a trendy market, right? What is a major key? You identifying the first high, the second high of a correctional phase, and then connecting the second high to all the breakouts that okay, right? Which means this is gonna be first high, second high, and then from the second one, we're gonna be so this is the major key, right? And then this one will be the minor keys, right? Which means you're gonna be having something like this. Every correctional phase, the high of the correctional phase, you look for what? You look for your what do you call this thing? For your retest, you highlight that high, and then the retracement when it's done, price will break it. Just know that after the break, price is most likely to do what? To retest that level again, which means when you have something like this, right? This will be your first touch, your second touch, right? Your first touch and your second touch, which means when price starts doing this, all you're gonna be doing is looking for the breakouts of this area here. But like I said, note that every breakout that occurs, price has the chances of retracing back to the trend line. So it's a break, retest, push. Break, retest, push most of the time, right? So personally, this is something that I've seen work beautifully, right? So which means you're gonna be looking for buying opportunities within areas like this. You're gonna be looking for buying opportunities within areas like this. Here, like I said, your take profit is always a high above this one, right? It's always a high above this one. If possible, you can use a Fibonacci from your high. Okay, I have to put it upside down, I think, if I'm not mistaken. Yeah, so my take profit will always be this area here above, right? This area above. So that would be my take profit, right? It's really nothing complicated. For those that are using supply and demand, like I said, guys, there are areas of taking a loss. I'm not gonna come here and tell you guys that okay, no, this is 100% accurate. No, this is this. All we are doing is to try to implement as many concepts as you can so that all of you guys can fit in this conversation that you're currently having here, right? I'm not trying to exclude anyone and say that supply and demand is the best or whatsoever. I'm trying to show you guys what is it that is working and what is it that is not working. For the supply and demand, guys, you know that this is your first push, second push, and then there are chances that you might find the demand area here, right? Which means you're not likely to look for buying opportunities within this area, right? Which means if you trade supply and demand and you are definitely mentored by me, you take a fib from your low to your high. So which means you're gonna have something like this, advanced level, and then that would be the only area of entry that you're gonna be looking for, right? So that's where you are supposed to look for your buying opportunities. So we are using almost everything that we have. We are using your support and resistance, all these concepts just to formulate a confluence on the trade that you are talking about. So which means at the end of the day, this is what we're supposed to have if we are more of like an intraday trader. And then as you guys can see also that the overall one is also pushing nicely. So it's just a simple thing. In pass correction, then a big impulsive movement, right? Which means if possible, we can have a retracement and then a push to the upside afterwards. If not, since we are closer to our target, we can just come and eliminate the high and then continue impulse into the upside. So this was our analysis for German 30. So moving on, what is it that we also want? We would also want to analyze, let me see here, dollar index actually, for those that are trading, what do you call this thing? For those that are trading USD pairs, right? The dollar index would be a very, very good pair for you guys to focus on. I don't know if I typed it right or what, because I think it's taking time to load here. So let's just give it a second. But since well, it's taking us a bit of time to actually load. One thing that I want us to talk about, guys, is that please, man, try by all means to master the art of what? Try by all means to master the art of price structure, because if you get the structure of price right, the chances of you succeeding they're very high. And then one thing that I want you to do is to invest your time, man, in understanding the basic thing, the impulsive correctional movements, impulsive and correctional movements. Those are the things that have been working for years and have high rate of actually you profiting from the market. So what is it that we can see on dollar index? What is it that the market was doing exactly? You can see same thing. We're doing price alignment weekly, in-pause, correction, in-pause. We are currently on a correctional phase, right? And then now when you move back to your daily time frame, what is it that you can see on your daily time frame? Price is currently on an in-pause correction and then on an impulsive movement, which means you are most likely supposed to look for selling opportunities within this phase of the market. What created this sells was this supply area here. So there was this supply area here, as you guys can see. This is one of our say A setups on the Discord group. We call this an A setup. When you find a pattern like this, it has the high chance of actually holding on price, right? Which means now, since where we are on an impulse, a big correction, and then an impulsive movement afterwards, you are supposed to look for selling opportunities from this area here, pushing down with price to come and eliminate this area. It's just the same thing. Trendline users, you know, right? You trade breakouts. You trade breakouts. These are your area of interest here. These are your area of interest here. Those are your area of interest. So this is what you want to be doing. Just this is the overall impulsive movement, right? In this overall impulsive movement, what is it that you want to understand? You want to understand that there's also what the impulse and what there's a correction plus impulsive movement inside this. Impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse. It's as simple as this. One thing that I want you guys to understand is this. After every impulsive movement, there'll always be a correctional back. So I wouldn't recommend you guys to trade the breakout of this area here because of price has the higher chances of actually coming back inside. So the best thing you can do is to wait for price to come back a little bit, draw your trend line, or look for your support supply area, or use your Fibonacci, or whatever concept that you're using to actually look for that selling opportunity to come impulse with price to the downside. And then, like I said, there are specific patterns that price should normally use to change the structure of price, right? For example, we are shifting from a correctional movement to an impulsive movement. What is it that we can see at the moment? We can see an head and shoulder here. We can also see a double top here also, meaning that this is a rejection pattern from a correctional phase of the market to the impulsive phase of the market, right? Like I said, you need to understand this type of information so that you guys can be able to know what is it that you're supposed to specifically look for as a rejection and a continuation pattern. So which means dollar in general is bearish, right? Okay. What is it that we are exactly anticipating on this, right? Since all this is a correctional phase of the market, where are we looking for to see price go to? We are looking for to see price trending in between this low and this high. So this is our range here. So our range is from what? A low to a high within the specific phase of the market. What we want to do is this. We want to see us looking for buying opportunities for anything below what? Below the equilibrium phase of the market, right? The equilibrium phase of the market. As you guys can see, like I said, the equilibrium phase of the market, we see a rejection and reaction. Look at how many times price have reacted at this area. This is weeks and weeks and weeks, right? Price fading to eliminate this area here, right? And then from there, what is it that we also can see? We can see that, guys, you have to be smart. Like you have to be, oh, look, from this range high to this range low here, right? If you call this guy here Fib, we are selling above the equilibrium phase of the market, as we've emphasized that this is the premium area, right? Which means when we want to do what? When we want to, what do you call this thing? Since we are selling on the premium. For those that wanted to buy on the discounted, this is the low of the discounted. What you had to do was just to take your fib from what? From your low to your high, which means anything below this area here was an area of, should be an area of interest, which means you're supposed to look for your buying opportunities at this area to impulse price to your demand, to your supply area, and then push down with it, right? Like I said, we don't trade the same concept. We don't trade the same concept, which means we don't approach price in a similar manner. So someone was gonna do something like this. We call this a buy to sell model. Then you're gonna look for your main entry and then wait for price to come tap you in and then impulse with price to the upside, knowing that we are from a correctional phase, looking for a rejection and then impulsive movement to the upside to go and eliminate this created high here, right? And then moving on to USDT. I don't know what is it that USDT has been doing. I was busy with some things, my personal analysis. Like I said, this resistance support area here, it looks to be strong, right? It looks to be strong, which means price tapped once, twice, and then for the third time. The strength of a support, you see it or resistant by the amount of taps that price has into it, right? But like I said, there are areas like this that play a major role, right? That price might actually do this, and then push down to come tap into that area before impulsing to the upside to go and eliminate that area there at the top. So from my side, I wouldn't say I have a proper view, but all I can say is we have an impulse, correction, impulse, a major correction. So this correction at this moment is at the equilibrium phase of the market. So this is a reaction, right, of the overall structure. This is a reaction, as I've emphasized previously, that okay, when price reaches the equilibrium, it will do what? React and reject, right? So the reaction is just tapping it, and then the rejection is it going back up, right? Which means it can easily come back down to eliminate that area and then push to the upside to go and eliminate this area here, right? So which means if you can, right, what you can do is this. What you can do as a trader for now is to look for what do you call this thing? You can easily come and look for any form of supply or any form of area that you believe that it has the power of doing what, bringing price down. So, but what we can see now is that price is ranging in between this area, this low, and then this high here. So, what we want to do is to see price eliminating this high and then pushing back down to come and eliminate all the areas below. If not, we're gonna see a continuation of that push to the upside to come and eliminate that main high, which means that this resistant support area here had the power of actually doing what, eliminate holding price to come and eliminate its overall movement, right? Yeah. Gold, let's go check gold. All right, let's just go check gold before we end today's session. So gold, what is that we can see? Oh man, this guy has been bullish for days. You know, one thing I've actually realized after, I think it was 2 weeks of journaling, right? I journaled after for 2 weeks because of there was a massive loss, a massive drawdown that I had. So I realized that it was difficult for me to trade gold, especially when it created the all-time high, right? Why? Because of normally when it creates the all-time high, there's really nothing on the side that can act as a way of holding price, which means the more you think it's gonna go down, it's the more it actually continues going up, right? And the more you want it to continue going up is the minute they start becoming bearish. So that was something that really got me confused, right? So, but channeling identified some type of structures that price creates most of the time on those phases. We can see that this guy is impulsive, man, right? Has been on a bullish structure for a long space of time. What is that we can see? There's an impulse, correction, impulse. We are currently in the correctional phase. With this correction, there's a swing high, swing low, the equilibrium phase of the market, premium, equilibrium, and then discounted. So there are chances that gold might come to this area here. So what you can do at this area is to look for selling opportunities to bring gold down to the demand area and then impulse to the upside. It's as simple as this. First push, again push, a push to the downside, temporary low, demand area. We are done with this guy. So as for our analysis for the week, this is where we call it a day. And then as you guys know, this week, what you guys should expect is basically me talking about some of the key mistakes that SMC, support and resistant traders and other traders make when it comes to their trading life. We are continuing with the series, right? The series that we've been me recording videos, educating you guys about some things, right? So yeah, I'm looking forward to working with you guys. And then yeah, I hope this session was a very important session. Click the link below, join the groups, come, let's work together, and let me help you build your trading edge. And you can see, guys, the same information I was teaching you guys, I didn't bring anything different. I've been saying one thing over and over again with this information, right? I'm not giving you guys new things or building new things. I'm just using the same information I've been teaching you since we started this series of us trading together. Impulse, correction, structure, demand, supply, patterns, all these types of things combined together. Other than that, wishing you guys nothing but a profitable week and goodbye.